to the USPS corporate ledger, creating the fake loss Trump is now so bombastically citing as the rationale for his destructive inquisition. This is Jim Hightower saying, sometimes public policy inadvertently turns bad, but when it's based on ignorance and arrogance, policy inevitably goes bad.
You're listening to an encore presentation of this program, KCAA, the Inland Talk Express.
Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's a telephone number. If you pick up the phone and give us a call, we can talk to you about your mortgage or your real estate needs or whatever is going on in your real estate life. And why do I say that? No, there are many opportunities in the real estate world, in the real estate business. I was just recently out in the city of Las Vegas. I want to say hi to my people out there, channel 47.4, Metro TV, the people who also produce our Las Vegas real estate show each and every week. I want to say thank you to them. We have 3 radio stations we're currently on. Thank you to KCAA, KMETA, and K-Tahoe, all the great stations and work and the people that are there who help bring the show to you each and every week. You know, the opportunities in the real estate world, okay, look around. You drive down the street each and every day and you're thinking, okay, how can I get my income to where I need it to be to retire? How can I get my income where it needs to be in case some catastrophe strikes my family? Some medical emergency. I know we have experience in that on the show, as well as just recently I've gone through some issues, not me personally, but within my family, which has caused us to have to come up with money immediately for somebody for some treatment, right? Now, there are all kinds of treatments out there, whether it's for cancer, or whether it's diabetics, or whether there's some rehab involved, or whether there's any number of things that you're going to need in order to keep health in the family. Number one thing in regards to anything in life is if you have good health, you really got a shot at life. If you don't, you don't. And if there's somebody in your family, I've experienced it, I know Daryl's experienced it, and most people out there have either had a parent, a loved one, a sibling, a child, a spouse. It's some distress along the way. I know years ago my brother, who had Alzheimer's disease, was really tough at the end, and unless we had some form of medical insurance, there was just no chance we could have afforded that. It would have drained all our bank accounts and it would have been awful and terrible. So if you're out there right now and you're experiencing one of these things that we've been talking about, money in the bank or money that is put into something which gives you residual income, i.e. you're not working for it, it's basically passive income. And I don't mean the stock market, I mean like a rental property or some commercial property which you are renting out to businesses. These type of real estate investments really help out when you've got an emergency. And so if you're sitting on your home right now and it has equity in it, and you're looking for something to do with that equity, as everyone knows, equity in your house is capital that is not used. So if you have $100,000, a $200,000 capital in your house based on the way that the appreciation in the market has gone upwards for the past, I don't know, 6 or 7 years, certainly in the last 2 or 3 years, you are saying, hey, look, I've got this money. I could take this money and use it. Well, this is one of the reasons you do use it. Buying a boat, going on vacation, going to Vegas, these are all great things. But for most of us out there, and I include myself in this, money that you can invest in something else which brings you long-term security, or rainy day money for when you need that medical expense, or any number of other emergency situations that come up, and my family just experienced one recently. You're going to need somebody to help you try to understand how to take money out of your house with a reasonable interest rate currently on your loan, and then take that money and invest it in a real estate opportunity As I said, drive down the street, look around. There's office buildings, there's retail space, there are even things like vacant lots. You say, oh, I'm not going to buy a vacant lot, but purchased at the right time in the right place. A vacant lot is money in the bank. Why? Because you may have an expanding downtown area or somebody that needs parking, and you just happen to have a vacant lot in a city situation. I've seen it happen. Look, anybody go to the Rams games? I'm sure that you've all been to the Rams games. Or maybe you go to USC or UCLA out in Pasadena. Any of these venues, and you drive by on game day, how many lawns are turned into parking spaces? I'm just telling you, even parking spaces in terms of vacant lots can be valuable if purchased at the right price at the right time. I wanted to just talk a little about that because so often we let opportunities slip us by. I know years ago, my next door neighbor had this house and she lived in a mobile home. Now, there's nothing wrong with a mobile home, but we were talking in a very expensive neighborhood in a very expensive town. And this particular neighbor of mine insisted that the canyon behind her house had to get filled with dirt and stone because there was danger of the entire canyon collapsing as a result of a fault line that ran through the property. Well, that never happened. So she spent 15 years fighting the Coastal Commission, the city, and the county in order to be able to do this. What she really wanted to do was take and make her lot usable for the entire 3.5 acres. Only really 1.5 acres were usable, right? So, and we all have these real estate opportunities that buzz around in our heads. So this lady at the end had gone through her entire savings, still lived in a mobile home, and by the way, she was a mother of two, single mother of two, and was raising these 2 children in a mobile home in a very expensive area. A bit of a stigmatization for the kids when they went to school, and I don't know anything about the experiences they had as a result of living in that particular place, in this particular neighborhood, in that particular city. But let me just tell you, it's like a Beverly Hills type place, and you were living in a mobile home with a chicken coop. Okay, it was hard enough on the kids, and the mother fought it until she didn't have it, and finally she said, "Forget it, I'm going to sell the property." The house, the mobile home was, obviously you just hauled it away, but the lot was for $950,000. So I should have bought it, right? This is one of those shoulda, coulda, woulda things, and I didn't do it. So a neighbor of mine, another neighbor, came in, bought it, $950,000. He built a house on it, sold the house and the land, never filled in the canyon, never did any of that nutty stuff. $5.5 million is what he got for the house after he built it. Might have cost him a couple of $1,000,000 to buy the house, and then, to buy the lot and then to put up the house. Maybe it cost him $3 million. But this is what I mean about opportunity. And driving around your neighborhood right now, you can see what the opportunities are. You have a gut feeling, you have a tingling. You know when you look at something that, hey, I could make this something better. I have another story for you. I have an agent who works for me. She wants to buy a house. She looks at the house. It's in a section in Calabasas, Agora area of Los Angeles. And she bought this house, or wants to buy this house, for, again, $995,000. But when I'm talking to her and her husband, they just had a baby. Anybody out there like that? They're young. They have a child. They're excited about life, but they're looking at the real estate as problems as opposed to opportunity. And this is what I mean. So they got it into escrow, and they continually, they have $100,000 in repairs that they want. They have a bad foundation. They have a small lot, and it's problem after problem after problem. So when they talk to me, it's an easy thing for a guy who's not involved emotionally. I just said, well, let's say you didn't get any repairs done. How much would it cost you to repair the whole thing? $100,000. Okay, what's it worth after you do that, once you've done the math? $1.4 million. I said, so what you're saying to me is you can afford to buy it, and if you had to fix up the thing today and sell it in a year, you could make $200,000 to $300,000? Yes. Then what are you thinking about? Then do that. This is opportunity in the real estate world. You're never going to figure out the best, the most, advantageous. This isn't 2008, 9, and 10. This is in 2018, but that right there is an opportunity. They can afford it, they can do the fix-up costs, and they can turn around and sell it in a year. And you know what they said to me? Oh, we'll probably live here after that. Anyway, I'm Jeff Barton. I'm your host for the Mortgage Voice, and we'll be right back. Thanks very much for listening.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's our telephone number. Pick up the phone and give us a call. We talk about mortgages. We talk about real estate. We talk about anything and everything to do with how are you going to get your next house? What are you going to do if you do get your next house? And are you going to stay in that house for a long time? All these questions are really important when you're trying to get a mortgage. Mortgages are easier yet harder to get, and I'll explain that probably in a later section. But in terms of some of the things other than a standard fixed 30-year loan, you can get all kinds of non-QM, and that's qualified mortgage. We've talked about that many times on the show, and we've talked about the solutions that a lot of our different lenders and lending partners bring to us. One of those, of course, from ACC Mortgage. We've not had her on the show before, but I really appreciate it. Kelly Brown. Kelly, how are you today?
I'm doing great, Jeff. How are you today?
You know what? I'm a little stressed, and I'll tell you why. The market is not cooperating with us, and we're losing borrowers to the difficulty of getting loans. So I wanted to have you on the show to tell us what your company is doing to try to help me and my borrowers get loans in a better or easier fashion. And really, that's all. I'm just telling a story here, right? So really, I'm just asking you, what's happening with your business, and maybe give a little background of who you are in ACC for the people who don't know you or them.
Sure. Well, my name's Kelly Brown. I'm a senior account executive with ACC Mortgage. We're based out of Rockville, Maryland. I'm actually out of California, though, Newport Beach. ACC Mortgage actually stands for All Credit Considered. We've been in business for just almost 20 years. I made it through the crash and everything. We are a non-QM portfolio lender, and we actually, our niche products are foreign nationals, I-10 programs. We can do 12 and 24-month bank statement programs. We have an asset depletion program, and we have a NEVA program standing for No Income Verification of Assets on purchases and refinances, and then a NINA program, which is No Income, No Assets on refinances. We specialize in non-warrantable condos, and we can do large acreage up to 10 acres as well.
Let me ask you a question. That's a lot of products, and I want to focus on the NINA, No Income, No Asset program for a second. Tell us a little bit about that. What kind of equity do you need in that? And the reason I bring that up is because we have a large and varied audience that listens to the show. But anytime something sounds as good as this kind of program, it reminds us a little bit of 2008. So tell us a little bit about the program, how the protections are built in for the market, and what kind of customer you're looking for.
Well, this would be for self-employed borrower, most likely. And the application would be actually blank on the income part and blank on the asset part. And it's only applicable, like I said, for refinances. So they can't purchase a home using that program and product. It would be based off of our investor rate sheet, and depending on credit, the interest rates would fluctuate. But in most terms, it would be for the person who has at least 20% of equity in their property. And then they could move forward with that loan to get a loan proposal from us.
Now, is this the type of loan that may be a bridge loan to getting a conventional loan or some kind of a standard portfolio product, not portfolio product, but a standard Fannie Mae or Freddie Mac loan, meaning that maybe you were in the market for hard money at one point, now you want to bridge that, get a lower interest rate possibly towards your ultimate goal of getting a Fannie or Freddie loan?
Yes, that's one opportunity you could use this program for.
I see.
And you're not going to have to pay like you said, it's kind of a bridge between hard money, non-QM, going into Fannie and Freddie, regular conventional loans. And you're not going to be paying a hard money rate, which would be much higher than the rates that we're offering on our investor rate sheet for this NEVA and NINA program, because the rates fluctuate on the rate sheet anywhere between 5.99 on up, worst credit scenario, which would be 620 FICO score to 8.99, and those would be the par rates.
Of course, and because, hard money could be anywhere from 10 to, 14%, depending on exactly your credit score, the amount of money in the deal, a lot of things. So this could be that medium ground. What kind of borrowers look for this type of program? You said self-employed, obviously, but who else would be a good candidate for this kind of program?
A person that's not showing a lot of income on paper, but might have a heavy cash flow coming in as income.
Right.
And like I said, probably most likely the self-employed.
Right, exactly. So when did you guys roll these programs out?
Oh, I believe they were rolled out about a year or so prior to me coming on board.
I see. And how are you doing with them?
Great. It's one of our hot products.
I bet.
Yes, especially the NEVAs, because you can use those for your second homes or investors. Right. Cannot use these programs on primary residences, though. I have to emphasize that.
Okay. So these would be what, investor properties?
Investor, yeah. Second homes.
Investor, second homes. Okay, both of those things are obviously what we led off the show talking about. How do we get residual income long term, especially when you've got maybe some disasters in your family, you got education you got to have paid for. So there's all kinds of reasons why which you need income property, and this would be a perfect example of what you could use this loan for, right?
Yes, exactly. And we can actually use this particular loan product, the investor product, on 2 to 4 units, condos, and also non-warrantable condos as well.
Tell people what non-warrantable condos are, because you hear that, and you only really need to know it when you can't get a loan, because it's a non-warrantable condo. So tell people what that is, and maybe provide them with the solution that you have too.
Yeah, it's based off of the particular condo project and how many investors have actually bought into the project versus how many investors are actually or have bought units and are actually living there as a primary residence. And usually a questionnaire has to be filled out, and then depending on how the questionnaire is answered would determine whether it's a non-warrantable condo or not. But the good news is at ACC we can do non-warrantable condos pretty much 99.9% of the time.
Now, there are certain places around the country. I think Florida is one of the places you guys do business, right?
That's correct.
Okay, so in Florida, as well as a couple other places, the condo market really sank when the economy hit the skids. And I don't know if they have come back 100%, but a lot of the problems of these condo associations were that they were underwater, they were underfunded, and there was, no lender who would lend in situations like that. Is that what you're talking about a little bit?
Yes, that's correct. Because of the crash and hurricanes and so forth down
right, of course.
The market as well have an effect on that. So a lot of lenders are a lot more strict due to that fact. So that's one of the advantages to considering us. If you're considering to purchase a non-warrantable condo, we can do those loans for you.
That's interesting. The weather-related elements that you mentioned, yes, there's a bunch of them in California right now with the fires. How are you guys handling that when you are in escrow or somebody wants to use a loan in a particular area that has been either ravaged by flood or fire or hurricane? What happens in those circumstances?
Well, it has to be looked at very clearly by our senior underwriter and analyzed and so forth to see if we'd be willing to lend in those weather-restricted areas.
Sure. Sure, no, and I understand that. Obviously, nobody wants to lend where they, are in danger of either losing the house because of the hurricane or fire or flood, or never getting their money out because there is no more unit anymore. Listen, Kelly, thanks for coming on the show. We are up against it. That was a very quick 10 minutes, but I do appreciate you spending time with us, educating everybody about products over at ACC.
Thanks so much, Jeff.
Thank you very much, and I'm Jeff Barton.
Day.
Oh, and you too. Thank you.
Okay, thanks.
You're welcome. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's the telephone number. Pick up the phone, give us a call. If you want to email us, it's info@malibufunding.net. The website for the company, and by the way, Malibu Funding is the sponsor for this show. I happen to work for Malibu Funding, 79620, that's the NMLS number, and the website is www, I don't know why anybody says that, but I always do, .malibufunding.net, and you can go there and look at the company, look at who we are. There's a number of different great loan officers on the website, and if you want to talk to any of them, please give them a call or just email them or however you want to get in touch with them. One of the more senior people and also one of the better loan officers I think I've ever met is Luke Mankey, who joins us again from Malibu Funding. Luke, how are you?
I'm good, Jeff. Thank you. How are you doing?
I'm okay. Thank you very much. We talked earlier and off air about risk, assessing risk, and trying to aid buyers into understanding what the opportunity is versus the fears that surround all buyers in the buyer's remorse section of our program. As you know, you get into a house and you're excited. The inspection comes and you're nervous. Then the appraisal comes and you're nervous. And then by Tuesday night before you have to make your final decision, you don't want to buy the house anymore. How do you help buyers understand risk, understand opportunity, and really the way by which they need to look at the situation they're currently in?
Well, I mean, they obviously want to buy a home. That's why they're in that position. If they're in contract and you've gotten inspections and then you get the appraisal and you get these results, and then you start thinking, okay, do I want to ask for credits or repairs or whatever? But they always seem to get a little bit nervous, or not always, but quite often.
Right.
And you kind of got to remind them everything. I'm going to go a little bit, like you could almost compare it to, I've been sick in my life once as well,
right,
or like a woman being pregnant, same kind of thing, where they go through all this struggle, and then they get this beautiful thing at the end, a child, you're healthy, whatever, a new house.
Right.
And you forget about all of the stuff that you went through to get to that beautiful ending. And I think in this case, at this point where people get nervous, they don't realize everything they've put in to get themselves there. Getting the right realtor, looking at 5, 10, 50 different homes over 5, 10, 15 months.
Right.
And then doing inspections, and then getting the right loan, getting it approved, getting all the conditions, paying for inspections, appraisal, all that stuff. And sometimes they may get an inspection report that has issues, and then they want to back out if the sellers don't want to play ball and give them credit. And we had an instance like this a week ago where, they were upset that the sellers weren't giving in and giving them credits, but you got to remind these people, like, it's a competitive market. You're fortunate to be in the escrow and have a house that you want, and it's an upward trending value market. Like,
right.
There's just so many positives to it. So I think just taking a step back and maybe reminding them everything they've put in to get themselves here, and just make sure they're considering everything instead of just a shotgun reaction of like, oh, I don't like this, I want to back out.
Yeah. I think that's right, and I think the ability, describe to me your ability to be able to explain that in a way by which not only it's non-threatening, but that it is informative so that they can make choices based on the information rather than on emotion. Yeah,
I guess you should develop a rapport, and fortunately, I don't know, maybe I'm just good at developing relationships and rapport with people, but I feel like we're speaking the same language pretty quickly from the get-go, but especially within the first few weeks, like, we're on the same page. You gotta invest in them and get them kind of versed, and so they know what to do, what to look out for, and then I know what they want as well. And so it's almost like, I don't know, I feel like I'm their counselor sometimes.
Right.
And when they get off track, you got to remind them. And it's not like you're pressuring them. Heck, I almost talked somebody out of getting a house a few months ago where I was so upset with the sellers, and so I gotta check myself as well.
Right.
So I don't want to come across on this show like, oh, I'm always just pressing people into buying. No, it's just taking in all of the factors, all the considerations, the positives, the negatives, the costs, the losses, all that stuff. And so I don't know. I guess I just try to, be a sounding board or provide good advice.
Well, yeah, I think the emotional part of our business is always, we have to suppress our emotions because, yes, we do get paid. Yes, this is how we make our living. But at the same time, providing realistic answers to people who have questions is really what we do. And nobody does the loan process and laying out the options. I mean, the clients you're talking about, we both know the clients you're talking about, and you know the entire family. You've helped this family for years, but it wasn't always that way. I mean, there were struggles to get the trust with people, with this family, and I think with all customers. In order to be able to do that, you have to be dispassionate about the information and advice. And so I think in doing that, you represent your clients, your customers, in a way by which they can trust your particular opinion, right?
Yeah, I absolutely agree. And it's not, it's a lot of work that we put into. It's not, not to toot our horn here, but this is
right.
Why I like what we're doing. I don't want to sit at BofA or Chase or Wells or in some bank like I just got 50 customers coming in, and I'm not going deep with anyone. Like, I'm just,
right.
It's like I got, if this doesn't work out, I got 5 more people coming in the next half an hour.
That's right.
And so it's cool, like brokering like we do and being a smaller business. You got to put in the time, but once you develop that relationship, like your family, and the business is like I view you like that, and I view my clients like that, and so
yep.
I don't know why it keeps me interested.
Yeah, and I think when you're talking about in the brokerage world, in small shops, you get to develop the relationships, but you also get choice. Tell us a little bit about the choice that you have of the many different lenders that you can choose from in the different programs that are out there.
Yeah, I mean, I don't know how many we've got, 30 or 40 or however many the wholesale lending relationships we've got that we can broker out with, and it's not just if it fits the box, traditional full doc, tax returns, pay stubs.
Right.
And if you don't have that, then sorry, you got to go somewhere else. Like, we're so versatile. We can pivot 15 different ways for different asset pledge-based loans, bank statements, stated, hard money,
right.
or DA, FHA, all that. Like, we offer it all. And we kind of are what our referral basis is, and I just tend to get a fair amount of outside-the-box people that need unique kind of lending solutions at times, and so it's good for me. I mean, but this market, I don't know, for me, like, there's just been a ton of bank statements, self-employed, combo of gift funds with self-employed banks that, like, all these niche portfolio products we didn't have a couple of years ago, or if we
right.
did, they were super strict. And it's it's helped, like all the vast array of products that we have out there now that our company is able to provide through all these different lending relationships we have.
Well, you mentioned not working for a large bank because really you're order taking, right? People come in the door,
yeah.
Either help them or you don't. If you can't, they walk out the door. In a situation you're in now, you're really a problem solver advisor, and I think being that kind of person that I think you are naturally, it's a good fit. And customers that come in, and as you said, we have difficult clients that come in the door who can't go to the traditional cookie-cutter loan shops or banks. And that is both invigorating and also frustrating, right?
Yep. No, it is. And we can, sometimes it starts out that way where, BofA, Wells, whatever, any large bank or whoever, like they couldn't do it. They don't have this vast array of products that we have access to. And then they come to us, and we do that first loan, then you develop that relationship, and,
Right.
and then maybe you improve their credit. We do credit repair. We'll get them up, and then the next time, or they refer somebody that is a top-shelf credit, where they could qualify for those major bank-type loans, but we can do those as well. In fact, our rates are every bit as good, if not better.
If not better.
So it's
Hey, Luke, shout out your phone number with you. We're up against it.
okay, 818-209-2592. I appreciate it.
Thank you very much. Thanks for coming on the show. That's been Luke Mankey from Malibu Funding. Luke, thanks.
Okay.
Okay, man. I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. 888-713-2929. That's the telephone number. Pick up the phone. Give us a call. We talk mortgages. We talk real estate. We talk all things that are happening in and around your neighborhood. And what is your neighborhood? That's Any Opportunity USA. Right down the street from all the good things that we try to do with our show, which is, explain what's going on in the real estate world, what's going on in the mortgage world, how can you get a loan, what are some of the products out there. We know things have been changing continually for the last 3 or 4 years, and certainly rates have gone up, and as I said in an earlier segment, 2019 looks like they're going to be at least a point higher than they are today from the Fed standpoint. I don't know what the bond market is going to do. I don't know what the mortgage-backed securities are going to do. But suffice it to say is when the Fed raises rates, usually the bond market and the real estate mortgage rates follow. I am here today to welcome once again on the show LaWanna Bradford from the Bradford Group. She's going to talk to us about what's going down in another state that we do business in, Atlanta, Georgia. And I really appreciate it once again coming on and giving us an update about what's happening down there. LaWanna, how are you?
I'm well, Jeff, and thank you so much for having me again.
Thank you very much. Okay, so how have you been? How's business? What's happening in Atlanta?
I've been doing well, and business is also doing well.
Great.
And the interesting thing with Atlanta is we are going through a boom. We've actually are like the third fastest growing metro area in the nation.
Wow.
And I know when we've talked previously, building, construction, everything had just really slowed down to a crawl. And
right.
Now everywhere you turn, there are multifamily units coming up, mixed-use developments. It's just amazing where they're finding places to put buildings.
Wow, this is quite a turnaround.
It's a huge turnaround. Our population growth right now is 5.8 million, and I just read something the other day. They said by 2020, we're projected to be at almost 8 million, and that's insane.
Wow. That's an incredible jump in population growth. I was out in Vegas recently, same thing out there. I mean, they're at 2.5 million, and they're projecting, the way they're building the infrastructure, to at least be 4 or 5 million by that time. That's amazing. That's really amazing. So, opportunities in real estate, there must be plentiful because you've got an ascending market, right?
Yes. Yeah, definitely. It's a seller's market.
Of course.
For those that are property owners, and the homes are actually staying on the market for about 45 to 60 days. People are scarfing them up fast, and it's making it really challenging for investors out there that are trying to bid on properties. So
I bet.
Obviously, cash is king.
Right. So what do you have in terms of percentages, cash buyer to getting a loan?
Cash buyer to getting a loan for us at the Bradford Group. We're seeing probably about 70% loan, and 30% of our buyers who were cash buyers are coming back to us now just to cash out.
Wow.
So to take that equity and then and then buy more property with it.
Yeah, okay, so down in Atlanta right now what you're seeing is people want to keep reinvesting in the community in housing simply because the upside is so great.
Exactly.
New construction?
new construction, existing construction, infill
Right.
development.
Right.
We've surpassed the national average as far as valuation in properties. We're at 8% in 1 year.
So national is about 6.5%, right? In terms of accrued value on the home each and every year. I know.
Yes.
Wow, I haven't visited with you in a while. This is pretty exciting news. So give me some neighborhoods where really there may be some opportunities for people who are listening.
Sure. The Norcross area is booming. Gwinnett County.
Right.
Midtown Atlanta, along the Beltline, that new development. Also, definitely around the new Falcon Stadium. Everyone's trying to scarf up as much as they can there. And in Roswell, those are the key areas that are seeing some pretty significant growth.
The new stadium, aren't they putting it right near the old stadium?
Yeah.
Right.
So it's already up. It's up and open. But
Oh, okay, yeah.
it's definitely the opportunity to, if you can manage to afford to purchase anything down there, I would encourage you to do so.
Okay, so if we have this kind of rising, I guess, tide in terms of value and building and interest rates, what's the affordability like down there? Are we finding that we're getting squeezed on housing in general?
Right now, the housing values are about where we were in 2006. So remember,
Okay.
Atlanta just really tanked.
Yes, it did.
Right now, I would say the affordability is definitely still there.
Okay.
But if we continue on this trajectory, and given that, household incomes are really receiving a modicum increase of about anywhere from 1.5% to 3% a year,
Okay.
eventually they're going to be priced out of the market.
Yeah, that's right. So employment in Atlanta, obviously, if you've got this kind of projection for population growth, what is the employment situation there? Is it good? Is it menial labor? Is it sales force? What is it?
We're doing really well with employment. In fact,
Okay.
we are being looked at now as the new financial tech hub in the nation. So like with Amazon, we're one of the major areas contending to have the second headquarters.
I saw that. Yeah. Good luck, by the way.
That would be amazing because
Yep.
it would be right down the street from where I live.
Oh, yeah. So your house will be worth a lot more. Good for you.
Oh, yes.
Yeah, no, I'm sure all the locals are really excited about the potential of Amazon moving in. I know that their distribution hubs really are, very desired businesses to bring into any neighborhood. So the employment's good. The affordability is a little bit down. Where do you project rates are going to be in the next 6 months or so? I'm projecting at least a year from now it'll be at least a point higher, which is still pretty good. What do you think?
I agree with you. I think it's going to be, a point higher. Commercial,
Right.
I think commercial is going to stay a little flat. That's been the most stable of all the rates that I've seen, at least here in Atlanta.
I see. So, okay, so the commercial rates then, do you find that in Atlanta people still are going out shopping, or are they purchasing like everybody else is online?
Online.
Yeah. And so what's happening to that retail space? I mean, Atlanta had famous shopping streets. What happened? Are they
Right. They are. Unfortunately, they're closing up, but
Yeah.
they're going back in and they're revitalizing it with mixed use.
Right.
So you're putting restaurants and little quaint boutique shops at the lower levels, and then livable spaces above that.
So of the building boom, what are you building mostly of? Is it office space? Is it high multi-use buildings like condominium complexes?
Yes, it's mixed use.
Okay.
It's multifamily. There's a ton of multifamily, from your townhomes to apartment complexes, and that's what I see the most of.
Okay, very good. Listen, you want to shout out your phone number for those people who have relatives and people or moving down into the Atlanta area, just so people can have somebody to talk to, great person to help them with their real estate needs?
Yes, definitely. You can reach us at the Bradford Group at 404-618-2824. Again, that's 404-618-2824.
Okay, for the Bradford Group, you're doing mostly, are you still doing the high-end fix-up, or are you doing flips?
Yes.
Okay, very good. Explain a little bit about that for the people who are listening.
So with the high-end fix and the fix and flips, the great thing about it is we've got some new programs out that are really looking at the valuation of the property, so they're more asset-based loans.
Yep.
Rather than focusing on the income and credit of the borrower. So that's a good avenue. Also, we're finding that we have some programs that are opening up to your balloon mortgages. So you could have, for example, purchasing 7 to 8 properties, 1 closing, 1 mortgage, and as high as a 30-year fix.
Are they cross-collateralized?
Some are not.
I see. Okay, and this is, these are on investment properties, or are these also owner-occupied?
No, not owner-occupied. They're all investment, 1 to 4 units on the last program that I mentioned.
Okay. Okay, excellent. Luana, thank you very much. Really appreciate the update, and I've got to be in touch with you a little more. I mean, next time I call you, you're going to be living in the penthouse, or I don't know what's going to happen, but thank you very much. I really appreciate it.
Thank you so much, Jeff.
Absolutely, and I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry, 888-713-2929. That's the telephone number. Pick up the phone and give us a call. We talk about mortgages each and every week. KCAA, KMET, K-Tahoe, those are our affiliates. Really appreciate how we are put out by those great radio stations. Thank you very much. We have a wide and varied audience in the Inland Empire, San Bernardino, Riverside counties. Hello. And, of course, up in the Tahoe area. Love the place. Going up there a little bit later. Hopefully it won't be burning. And, Daryl, is it burning up there? What's happening up in Tahoe?
No, there's some smoke blowing over from some of the California fires, but no, it's not burning.
Okay, we're supposed to go up and see El Capitan and go into the park and do all the fun things that we never got a
Going
chance.
through Yosemite.
Yeah, I'd like to go. I've never been. You been?
Many years ago.
Okay.
It's a beautiful place. There was water was the problem when I was there. The falls were not
Falling.
active. Yeah.
Yeah, I know. Well, water's always an issue, and if you believe our president, apparently there's no water in California to fight the fires. That's what he was saying.
What a weird issue to take on. The place is burning down, and people are seriously losing homes and stuff.
I know. It's awful,
Get into
right?
a water rights dispute over that is
ridiculous.
Inappropriate in my mind.
Well, like you just said, I mean, thousands of people have lost their homes. Let's face it, this is a huge natural disaster here in California.
And then he's going to pick up a politicized subject and say it's somebody's fault.
Yeah, I mean, you're right. I made joke of it, and there is no joke when it comes to loss of life, which there has been some, loss of homes, which there have been many. And so, yeah, it's just not great. It's not good. And by the way, we're coming into fire season in Southern California right now. So as the temperatures continue to be hot and as the, I guess the vegetation continues to dry out, you know, this is what's happening. My wife says, I got to leave Southern California in October because I can't stand the fires.
Yeah, that's part of it. You know, I mean, every place has its cross to bear. You have tornadoes in some areas. We
Sure.
don't have those.
Yeah.
You know, we have potentially a tsunami if there's an earthquake somewhere else.
Yeah.
We have our 4 seasons. They say flood and
fire and
earthquake
and drought.
things like that.
Yeah.
And drought. But, you know, there are worse things to go through. If you've been through Florida, been through any of the hurricanes, those are pretty miserable as well.
Yeah, no, absolutely. And
so you just need to, so to speak, pick your poison and live with it.
you know, some of the things that have been out there in things to look out for and things that we need to be aware of.
Haboob.
Yeah, what's that?
That's the big sandstorm that they have in Arizona now.
I have seen pictures of this thing.
Haboob. It's awful.
It's unbelievable. It's as if the curtain is drawn and you know, it comes towards you in a mass of sand.
Yeah, it looks like the locusts are coming.
It's unbelievable. You know, I saw it and I was like, what is that? And I didn't know it was called a haboob.
Haboob.
Okay.
Yeah.
Well, this is not a native word. Apparently, it's an imported word.
From places where there's lots of
Lots of sand and lots of these
sand,
things that happen that black out everything, or white out, or sand out, I guess is what they say. All right, I want to talk a little bit about Fannie Mae, some of the fake employment that the Fannie Mae website came out with and was brought to my attention once again. A couple of fraud things, right, that are going on in the marketplace. Those of you out there trying to get a mortgage who need additional income, best thing to do is to find somebody with additional income in your family and put them on the loan in order to qualify for the mortgage. A scam that has been going around in Southern California since May and now has broadened to Northern California and perhaps other states. Fannie Mae has put out a warning, and I will read it to you. Provide fake employer information on loan application is more widespread than originally suspected, Fannie Mae said in a new fraud alert. What does this mean? So anybody that's getting a particular type of loan needs to verify and look at their employers. So what would happen is, in the employer or employment section of the 1003, which is the loan application, fraudulent material is given to the loan officer. The loan officer is either in on the scam or is an innocent victim. It is still yet to be determined in terms of what exactly is happening, but the employer that is used on the 1003 loan application is false. Now you might say, well, why don't people check on that? Well, the question is, do they check on that? I know from personal experience on one that happened to our company, we did actually call and verify the employment based on the phone numbers given by the loan officer and the borrower. So we called the employer, yep, that person works here. We send over the form via fax to the employer. They fill out the form, they certify it, they sign it by the supervisor and send it back to us. Now, in other cases, on different types of loan products whereby you have taxes that are given on the loan, this couldn't happen because the taxes won't appear to match what the employment and the employer is given as to both the employment and the income. So they would have to have a loan which is not required to have taxes provided. So these would be stated loans, some kind of income verification program, a bank statement program, programs by which the normal Fannie Mae, Freddie Mac type situations don't apply. However, in all of these situations, Fannie Mae bought these types of loans. So if you're out there and you're thinking, look, I need this loan, I'm going to stay in this house, and I just, I'm going to look the other way and use this particular method by which I can, sustain a house. Fraud carries with it 20-year prison sentence and $1 million fine. Just so you know that you don't need to do that when you get a loan. Find somebody in your family who can be added on to the loan if you, in fact, need additional monies to secure the loan that you need to get to buy the house. It's just not worth it. Okay, on a completely different front in terms of fraud situations, ran across this as well on the website, the Mortgage Solutions website came to me. Oh, this is this is a completely different thing. This is, I don't know, do you see this thing on Turkey? What happened over there?
No.
Okay, so the country of Turkey, which is in NATO, right, and we've talked about foreign debt or foreign, I guess, economic situations collapse. You've got all kinds of barriers now with trade. And in the past, we've talked how rates here in the U.S. have been affected by the fact that you have a situation either in Italy or in Ireland or in Portugal whereby those countries' economies are collapsing, and a lot of the money that was invested in those countries get turned into buying U.S. product and U.S. bonds, which is why the mortgage rates, one of the reasons they stayed down for so long. Well, Turkey itself went through a collapse, so to speak, last Friday, and their stock market fell 22%. Now, as a comparison, the U.S. stock market, let's say it's at 26,000. If it fell 10%, it would be a catastrophe beyond anything that you can imagine, and trillions of dollars of wealth wiped out. Well, 22% would be akin to what happened during the Great Depression, when stock market fell 25% during the 30s. Well, in Turkey itself, the actual stock market fell 22%, and inflation is rampant. And so we in the U.S. and a lot of people in NATO and Europe were wondering how this would affect both the economies here in the United States and in Europe, but also what would happen internationally in the banking world. Well, not a lot has happened. The government of Erdogan, who is the PM there, they're trying to solve the issue. There are a lot of things that are quite wrong with that particular economy, but if these would have happened in Greece or Italy or, heaven forbid, France, Germany, or England, the pillars of the EU, it would have really, really hurt the U.S. But at this particular moment, it does not. I am looking for that particular issue of fraud, which was the other thing which I cannot find. So let's just get into a second. Oh, I see we have 1 minute left. There's a lot of things that I didn't get to today. I don't know what the heck I'm doing. Anyway, I'm Jeff Barton, your voice in the mortgage industry. Really appreciate it. Daryl, thanks for jumping in and helping us out a lot.
My pleasure.
Okay, Hicks, absolutely. A little discombobulated here at the end, but again, appreciate those people at KCAA, KMET, and K-Tahoe for listening, and our great friends at Riverside, San Bernardino counties. This is Jeff Barton. I'm your voice for the mortgage industry, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.